After this week's failure of the bank, SVB's website says nearly half of the U.S. technology and healthcare companies that went public last year after getting early funding from venture capital firms were its customers.
This week's rush to pull money out of Silicon Valley Bank sparked the largest failure of a U.S. institution since the 2007 financial crisis. California and federal regulators seized the nation's 16th largest bank's assets, transferring them to a newly created institution. It's expected to start paying out insured deposits on Monday. The plan is to sell off the rest of the assets to make payouts to other depositors.
Thinking that you are too big to fail sometimes might be very tricky. If we don't learn from history, probably history is gonna be happening again. 2008, Lehman Brothers just went bankrupt. At just beginning of this week, Silicon Valley Bank was taken over by Federal Deposit Insurance Corporation. Hey, what's up guys? Welcome back to Millennial Money. Today let's talk about Silicon Valley Bank crash, how it might be affecting your portfolio, how it might affect your investing strategy upcoming months, what are the consequences, what are the other similar bankruptcies, and what is the lesson that we can learn from it. If you like it, don't forget to smash the like button and hit the subscribe button as well. Silicon Valley Bank was founded in 1983, having over 6,000 employees, and was one of the biggest US commercial banks until this week. Like with everything, like it doesn't happen from one day to another day. It was actually a long chain of bad decisions in a row. So how the bank was actually making money the most, it was that startups, focusing on venture capitalists, so CEOs who need the money, they actually go to the Silicon Valley Bank. And how it works in the United States, you have to keep at least 10% of the deposits. So let's say that somebody gives you $10,000. As a bank, you can be working with 9,000 of them, and $1,000 you have to be having in your reserve. Usually the bank is actually offering that money again to other customers, or there is usually some ratio that they borrow money and then the rest of the money they invest. There's like huge teams of the people working on the investment part, that how are they going to be making money, because bank has to make money in order to survive. So this week when the Federal Deposit Insurance Corporation was taking the bank, so bank actually had the assets around like 200 billions. People put over there over 300 billions. And pretty much how it works, like there is this Federal Deposit Insurance Corporation that is actually backing up all the deposits under 250,000. So let's say you as a customer of the bank, you have over there like 200,000 and the bank is going bankrupt, you will get money actually very fast, very soon. Tricky part about the Silicon Valley Bank is that over 95% investors had over $250,000 invested into the bank, which means by these regulations, probably they will not get the money. Or if they will, it will take like forever.
Established companies like Shopify, Pinterest, Etsy, and Roku are feeling the impact. In a filing Friday, Roku said about a quarter of its cash, nearly $500 million, was deposited at Silicon Valley Bank, adding it was largely uninsured.
And it started happening in actually 2021. At the end of the year, the bank decided that they are gonna put 100 billions into US Treasury bond backed up by US government. And I think there was a yield around 1.8%, let's say under 2, right? As far as bonds goes, if it's backed up by US government, it's pretty decent and it's actually very safe. Yield was like, let's say, okay for that time, but the thing was that they locked that money almost for 4 years over there. So what was happening at the beginning of the year, like 2022, that interest rates were changing, right? And actually the same position, if they would buy it like a couple months later, I think the yield was over there almost 4%. So actually with that decision they did, they actually lost a lot of money. I think this was the decision that started, whole, snowball effect and so on. Because, throughout the year, people were probably withdrawing money from the banks because, this situation in the world, like inflation and uncertainty. And actually at the beginning of this week, they were just not able to be covering all the withdrawals. So they just simply run out of money, which is crazy, right? They were asking for, emergency loans and so on. And we will see what's gonna happen. Nobody knows for sure. It might be some domino effect, because if you are thinking, let's say you are a startup, they have to be paying, they payrolls, they, services and so on. But if they cannot withdraw the money from the bank, probably they might go bankrupt. They don't have to, but it's gonna be like tough situations for them. They are in very bad situation and probably they are not gonna manage, and there's huge chance that people will not get money. I hope they will, and they will get as much as they can.
We're probably talking tens of thousands of clients, and we're talking CFOs and CEOs of startups that need to pay their people. that need to invest in technology, that won't be able to scale out their businesses or to last through what could potentially become a recession. And so this cash is actually critical. For any startup, cash is really a lifeline. And so this bodes very badly for the region's small businesses.
Warren Buffett, that he is always saying, don't put all eggs in one basket. If you have all money just in one bank, I think it might be, not the best decision, because you never know these days that whether it's investing or saving money for your future, right? So with the investing, what he is meaning that, don't buy just, let's say, one stock, but get, you should be diversify and buy more multiple, or just buy like index fund and you are like over there diversify like S&P 500 and it's proven in long run that it's profitable. And the same thing is with the saving money. You don't want to keep all your money just in one bank or two banks. Actually, it's very good to have one bank for investing that is kind of like the best for you. Then you have additional account that is for saving or anything like that, and you can diversify your money into different banks. It's pretty cool. The same as investing, like brokerage accounts don't have all invested money just in one account. I divide my stocks in one brokerage, then I have one brokerage for an ETF and so on. Quote from Steve Jobs when he was doing a speech at Stanford University, he said actually connecting the dots, looking forward, it's impossible. He was saying that because he was fired from the Apple, and at that point he was saying that it was like the worst time ever. But 10 years later, when he looked back, he said it was one of the best decisions because he started a new company, right, like Pixar and Next. Then later on he went back to the Apple and sold the Next. Sometimes we don't know if this decision is good right now, but as the time goes and you look back, very easy. And I feel it's same with the investing, that 5 years from now, you would look back and you would be glad that you invest. Another big crash that happened 2022, and at the end of the year, FTX, which is one of the biggest cryptocurrency platform, they just went bankrupt. And it was kind of the same. They were not able to be managing the withdrawals and so on. They just ran out of money. FTX had the problem, especially with the management. Actually, there were people that were, not educated in that field and so on. And that's why they run out of money, so poor management again. So whether it's a crypto or banking system or, stock brokerage, there are some common denominators, right? If there is poor management, doesn't matter what the business is about. It's probably not gonna last forever. It was the same with the Lehman brothers. In 2008, they just went bankrupt like this. They were old over 100 years. Yes, there was different bubble, real estate bubble and so on. Same story with Washington Mutual in 2008. They had over 300 billions in the assets. They went bankrupt just because they were focusing so much on the mortgages, So they had one product that was the most profitable, so they were just focusing on that. And that's what happened, real estate bubble. In Europe in 2014, one of the biggest Portuguese bank just went bankrupt. And the deal was over there, they were actually lying about the numbers on the balancing sheet. So while investors were thinking that, bank is making profits and they're doing well, at one point they were like, well, we are in loss 5 billions. Crazy, right? So pretty much what then Portugal government had to do, they had to inject billions of euros into economy over there. If they wouldn't do it, it could go at least to the European crisis. Cool story from Warren Buffett, actually he made a lot of money in 2008. It was with the Goldman Sachs. What was the deal? Goldman Sachs was actually looking for emergency loan because they were in trouble. Warren Buffett came to the game and said, I'm gonna borrow you, but this kind of conditions and so on. And I think that from the 5 billions, he made over 800 millions, which is over 10%, interest rate and so on. And I think he was back up with some additional stocks, so he was totally safe in that deal. He is known for doing investments in very safe way and so on, right? And he was always saying, be greedy when others are fearful, be fearful when others are greedy. That's what he applied even at that time. I think there were not so many people believing into bank system and so on, but he did the same. If you think about it, there is so many people that they were on the market, they were trying to invest and so on 2 years ago. Now they disappeared, right? And I feel right now it's happening the same, be greedy when others are fearful and be fearful when others are greedy. I think now is the time to be greedy, if there is good house with good price, just buy it, I think in the long run it could be a very good deal. So guys, always make sure where are you putting your money and make sure that you invest them smart. I hope that you learned something today. Don't forget to smash the like button and hit the subscribe button. I appreciate it a lot. If you want to learn about how to buy your first rental property, you can always check it out. If you don't have money for rental property, you can check out my video about how to make extra money. Thanks for watching. Until next time.